Good morning, everyone. This is Darth Vader filling in for FT for this Trader Bite today. Actually, I wish it was April 1st because that is an April Fool's joke, a bad one. I have a cold, and you can hear it in my voice, so we'll try to make this as productive and quick as possible. Although I just want to sit here and get into the mic and go, Luke. All right, let's get down to business. It is 8:02 a.m. on the 14th of April, 2022. This is episode number 2213. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Jumping into the conversion trading market pre-market summary sheet, I want to remind you all, first and foremost, that tomorrow all major markets are closed. No trading, no Trader Bite. Relax, enjoy your break. The overall market sentiment this morning is mixed. Europe's a little bit higher since the ECB did not raise their rate. They kept it at 0, and they're saying that their asset purchase program is likely to run through Q3. There's some issues with, there's still some concern about China's COVID policy risk. It looks like we're seeing some rising numbers here in the U.S. and others, and other places. So this is another COVID issue, COVID risk overhang. Again, the overall market sentiment's mixed. This morning, pre-market, we had some major earnings. We had United Healthcare, which showed $78.76 billion in revenue. Showed $80 billion in revenue, expected $78.76. Citigroup came in at $19 billion and $2.02 versus $1.57, so it surprised to the upside by 28%. Wells Fargo came in with a surprise of 8% on earnings, revenues in line, and Taiwan Semiconductor and others, Goldman Sachs came in at $10.76 versus $8.82, a surprise by 22%. Revenue was also stronger, 12.933 versus 11.83. That's a 9% surprise. And then Morgan Stanley, which is supposed to report before the market, but my service here doesn't show anything for them. Actually, no, they do. It looks like they reported $2.06. I'm not seeing an estimate on both revenue and earnings. So those are major players that have gone by. There's nothing after market. So that's where we stand. As far as the calendar, we got ECB at 7:45 Eastern this morning. Again, they kept their rate decision at 0%. The deposit facility rate remained at negative 0.5. ECB conference is ongoing. We got retail sales at 8:30 Eastern, came in at 0.5 versus consensus is 0.6, forecast 0.4, so slightly stronger. Initial claims came in a little bit higher than expected, 185,000 versus 170,000. And then later today, we're expecting the Michigan sentiment prelim for April. This is a market-moving number often, if it's way off, expecting 58.8. Business inventories at the same time. Then we have Fed's Mester, Fed's Harker, and then the housing price index this evening from China. That's what's on deck. Crude had come off a fair amount, but rallied yesterday. One second. But rallied yesterday over $100, went to over $104. It is sideways this morning, as is the S&P. The S&P pretty much in balance from the overnight session. Point of control, 44.41. The low at 28.75. The high at 55.75. Yesterday was a pretty good rally that pushed to one of the targets mentioned. which was 44.50. Above that's 44.60. Couldn't quite get to 44.60. I expected yesterday or today to get to 44.60. We have 27 points of range in the overnight session, which is a lot less, a whole lot less than what we saw yesterday at this time of day. So overall, a very quiet overnight session, really. I think when I came in at 6:15 Central, 7:15 Eastern, there were only like 128,000 contracts or something. It's very, very light, which is expected into the spring break, school spring break, and this long weekend. So again, I want to remind you to take it easy today. Let's not overcommit to any individual trade. I tweeted this out. Markets close tomorrow, so don't just be smart and let's not overcommit to trades. Commit today on our trades. In other words, don't try to defend a trade. Just follow your plan today, okay? As it is with every day. This is what I expected yesterday. The primary scenario was to push to 03, which we did early on, and I was looking for it to fall to 34.50. So I was looking at this as a bear flag that's likely to break to the downside. That didn't quite work out. It tried on the open, but it found buyers down here at 84, and then it pushed to 50. A really decent long trade setup, and that was pretty much it. Just sitting all day long, and it stopped. It filled, I think, 40 contracts at 49.50. So you had to be well queued to get that fill. So that's that. Scenario 2 yesterday. Here's what actually happened. Let's just look at. Sorry, guys. It's a sore throat and a snotty affair. Here's the review segment. I should have probably worn like a Darth Vader helmet or something just to make fun. So there it is. We open, we take a little bit of a pop down to 87. Don't even bother to take out the overnight low. The overnight was really weak. I expected the 84 to go. It just wouldn't. And then it looked like, remember, 44.03 was the expected test. So this rotation here had me looking short, and then it just came right back and held above the RTH mid, and it just became clear. The setup that I'm talking about was an iceberg, was an order flow setup at 10. There was an iceberg at 10 here, bang, 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 bang. And then I don't want to scroll back and show you it on the heat map. That's not the purpose of the Trader Bite, to focus on one individual trade. But it took out the 10, pulled back to 9, 10.50 was the trigger for the long, and look for 18 next, and then after that just work the stock zones, but the target overall was 50, 44.50, and it went to 49.50. 44, 49.50. So just 2 ticks ahead. And remember, those of you who have been around know that I always front run my targets by 2 ticks in the S&P for that purpose. Yesterday's profile, multi-distribution profile. Look at this ledge. That is a ledge. That is a ledge. Legendary ledge. But multi-distribution price discovery profile, pretty decent rally. We closed right at the high, but we didn't shift the point of control up towards the upper end of the range. Just 1 second while I blow. Sorry. There we go. So we finished pretty strong. Now, here's the thing to take away from this. Where's my composite? Well, actually, let's look at it on Edge Pro X. It's very clear there. If we look at the overview, or the intraday actually, if you look at the intraday, very clear rotations. You could see that the negative rotations are much larger than the positive rotation. Negative rotation, positive rotation, negative rotation is much larger, positive rotation yesterday. So let's not get caught up with the idea that yesterday's rally was something that would refute the fact that we took out the 44.50. That was the key resistance I expected yesterday, and it did stall there for just a second. But overall, it is not doing a good job getting back up and holding on to these higher prices. So here's the RTH only TPO chart. And so what you have is these bear flags, right? Textbook, gap, textbook, gap, and then we've got this kind of a megaphone formation here, but it's accepting balance down here. The point of control volume-wise down here is 29 even, 29 even. And if you look at today's low, it's 28.75. So we've pushed back to the top, to the most traded price by volume. But you can see that this is really not much more than a consolidation. It's not a bear flag pointing up, an upward skewed bear flag that might break to the downside. But to me, it doesn't look like it's found its buyers very well. Yesterday, it traded within the prior day's range. We didn't accomplish very much yesterday. We simply rechecked that whole sell-off. So the 1050 long targeted 44.20, 44.20.50 actually, where the single prints were the day before. So let's zoom in just to look at a little bit at the mechanics of that trade. So the day before, we traded, we traded down and down and down, and then we put in a week low at this 2050, and then we consolidated, and then we broke, and these are all single prints here. These are singles. We broke down, and then we came back up, and we closed here. And so yesterday, the key target, the first key target was the fill of those single prints, which were at 2050. So 2050. And the idea is that you want to scale ahead of that 2050. It might pull back, fill in the single prints that it put in yesterday, back at the 10 or so, consolidate, and then maybe later in the session it'll climb. But what it did is it actually climbed right through. It went to 20, pulled back. We consolidated there for a little bit, but managed to push higher and finish near highs. The settlement's 42.50. Remember, the double bottom low is at 44.50. So it poked through, came back, closed below there. To me, this isn't very bullish behavior, in my opinion. This is still resting. This is still fighting in the in between, and the overall consensus here. The overall consensus here is that we really just created. See, this is the composite profile for this area. We are just exploring and re-exploring this range. That's all we're doing, and we are likely to continue doing so today. So today, not expecting it much lower than probably 44.10 this morning. The range expected to be compressed. The overnight range is 27 points. Expecting the range to be compressed, expecting it to go down to 44.10, expecting it to trade somewhere between 40 and 10 today. We're opening in range. There was really no value yesterday given the multi-distribution profile. We've got single prints down here at 10. So not very much expected for today. So temper your expectations. And as I said, don't overcommit, over defend a trade. Okay. So that's the key thing I want to leave you with here today, in terms of how things are shaping up. A quick look at the composite because we have not looked at it all week. Just want to show you the overall composite and what it has done. Back to the review. So here it is, down, pull back, down, and we're in this box. And you could see that this week, the point of control is at 29.50. There's the point of control from 2 weeks ago, point of control from last week is at 44.60. That was the key target above if we were to continue running. And then the current point of control, 29.50. That's down, down, down. And we are really approaching the neckline here. Below this neckline, remember 34.50. If it doesn't hold at 34.50, it is likely to make a very quick run at 42.50 and 42.20 below. I'm just not seeing a market that is holding higher prices and continuing to push. Even if it pops higher, it comes back in. We have a gap that from last Friday that we failed to fill. We partialed it. I believe it fills at 68.75, something like that, if I remember the price correctly. But we're remaining underneath the point of control, and we're walking our way down into the stem of what's going on here, this rally. So we are retesting this profile from the second week of March, basically. Okay, that's the overall picture. For today, I'm going to do you the favor of not putting up scenarios. I'm expecting a choppy trade. Here we are popping a little bit off of that 29 MC point of control, and it's opening in range on top of the MC point of control, and it's not likely to move away very well. So scalp-ish trading today. So put your scalper hat on if you have one. If you don't have a scalper hat or a mean reverting hat, then please go enjoy the day and start your holiday sooner. Okay? Good luck, and I will catch you on Monday, hopefully with a better voice. Darth Vader out.